Welcome to this latest episode of the C-Suite podcast that we're producing in partnership with Payable and their Pay It Forward podcast. We're exploring the ever-changing world of payments, and on this episode we're going to discuss APMs, which cover everything beyond traditional credit and debit cards, whether that's digital wallets, BNPL, crypto, open banking payments, and much more. I'm your host, Graham Barrett, and joining me to discuss the current APM landscape and what further developments might be on the horizon are Matteo Gamba, Head of Product, Global Payments and Fraud at Wayfair, Sophia Ferber, FinTech Research Analyst, EMEA at S&P Global, and Alexander Burkhardt, Third-Party Acquirers Relationship and Implementation Management Lead, European Payments Initiative, or EPI. So welcome to you all and looking forward to this conversation. Matteo, maybe I'll come to you first for the initial question. Just give me some indication about how widely customer payment preferences differ from country to country. Can you give us some examples and maybe how businesses should approach such a fragmented space, I guess?
Yeah, no, definitely payments are one of the main differences in localization. When you go to different markets, it's one of the key things that you need to think about to offer a great customer experience. And different countries have different histories, different customer preferences, and you see that evolving over time as well. Anglo-Saxon countries, North American, they're very card-based. There's also a difference between credit and debit mix, but still, that's where you find most of the cards payments. In Europe, you're gonna see different countries having evolved in different trajectories. You're gonna see, for example, the Netherlands, where Ideal is a super strong payment method. Ideal is the way to connect directly to your bank, fundamentally. In Germany, you will find very limited usage of cards. You will find a super strong preference for PayPal, but also for open invoice. And if you go to Asia, you will see super apps being used from WeChat to other similar apps, where customers really leapfrog to a different way to pay. They didn't even go through cards. And this is really something that businesses need to keep in mind when thinking about going into a new market, because not offering the payment method that a customer expects to find will be a blocker to conversion. If customers have the ability to shop somewhere else that offers a more familiar and more performant way to pay, they will do it. So that's really the key advice. Make sure you understand your customers, their needs, and offer them what they want to pay with in the best possible way.
Excellent. So I guess what you need first is you need that insight, you need that knowledge, first of all, to understand all of those local payment methods. Sophia, maybe I could turn to you. So maybe you could give us some of those insights into the different payment methods being introduced. I know you've done some research into this field, haven't you?
Yes. So I've been having a lot of conversations with some of the leadership of various local payment methods from around Europe, which has been fascinating because, as Matteo said, there's such a difference in country by country in terms of how people like to pay for things. And what we've seen springing up over the past decade is a number of what we would call local payment methods in different countries in Europe, such as Blik in Poland, Bizum in Spain, Ideal in the Netherlands, Twint in Switzerland. Now, some of these have been developed by consortiums of local banks to provide a payment method which is faster and cheaper than what's out there in the market, and also maybe something that will compete with the payment products provided by the big tech giants such as Google and Apple Pay. So a lot of these local payment methods started out really being like pure kind of peer-to-peer plays, that if you want to split a bill for dinner with your friends, if you want to pay a decorator that was coming to your home. But some of them were had a e-commerce payments functionality baked in right from the beginning. So that was true for Twint in Switzerland, I think, and for Blik in Poland. But some of these other ones like Bizum, which started off very much as being, peer-to-peer, pay your mates, are now going more into e-commerce. So you can pay. So I think Bizum recently, Amazon recently integrated them in Spain as a payment method, for example. And then now that the e-commerce payments functionality has been added, a lot of these payment methods are adding a bunch of other different financial products and services in as well. So Twint in Switzerland, you can pay for your parking. I think Satispay in Italy. They are exploring some options for providing kind of wealth management, like kind of consumer savings within that app. So it's interesting to see like the life cycle of some of these payment methods go from just being pay your mates into being almost like a mini super app. But I just wanted to kind of give some more general context about how people are transacting online in Europe. So we do a bit of research called the Consumer Payments Market Monitor here at S&P Global. And just looking at Europe in aggregate, when people are paying for things online and in store, if it's a digital transaction, cards are still like very much the dominant payment method. So in 2024, we saw like 63% of digital transactions were actually cards. Digital wallets made up 30%, and buy now, pay later was 3.8%. And the rest was kind of other methods like bank transfers and other, which I guess is crypto, which we don't really see being a big thing for daily transactions at the moment. But looking ahead 5 years, we actually see cards are going to make up 59.3% of digital payment share by volume in Europe. So cards are here to stay. I think that's one message that I will bring. We're seeing a proliferation of really interesting local payment methods and alternative payment methods, but I also don't think that cards are going anywhere.
Thank you. That's brilliant. Thanks for those insights. And I guess, yeah, I mean, it's fascinating. As soon as you kind of open this can of worms, you just find all of these different payment methods across all of those different countries, as you've both outlined. So maybe the question is, how can we kind of consolidate these payments? And Alexander, I guess this is where you come in with the European Payments Initiative. So tell us about Wero and why that was introduced.
Of course, I will. And I think this already, Sophia and Matteo mentioned a lot of things why Wero is founded or launched in the country. So, but coming first of all, let's give you a heads up what Wero is all about. So, it's the first European-born digital payment wallet. So the idea is really offering a unified solution for the whole European market. I think this is something which is lacking today. So Sophia just mentioned great local solutions, but they are limited to a certain degree, limited to a market, limited functionality-wise. And our approach and our idea is based on an instant payment technology, offering account-to-account solutions for merchants and consumers. So the idea is, in the end, that we have a solution in Europe which is sovereign from say international schemes like from the US, mainly from the US, yeah, but also from Asia. If you look how the market behaves now in Europe, you see we are lacking a solution here, a solution for Europe, but we are seeing a lot of players, international players who are playing in the market. So for that reason, EP is developing the Wero wallet, which is starting with P2P functionalities, so to enable consumer-to-consumer transaction. But we are even beyond that, saying we want to be a secure mobile payment wallet, which are also offering omnichannel solutions in e-commerce, in-store payments, scan and go payments, and so on and so forth. So after launching our P2P solution in 2024, and it was a phased launch in 3 markets in Belgium, France, and Germany, we already achieved a great milestone, enrolling more than 30 million users in those countries by end of January. So the idea and the objective now is to increase that number on the one side, so establishing the P2P solution, while we are also focusing on the launch of our e-commerce solution, which is should happen by the second half of this year.
Okay, excellent. And what's the kind of end goal here then? I mean, is it to, I presume, to get as many European countries as possible involved in the initiative? And in terms of your ambitions, I mean, are you're trying to take on the likes of Visa, Mastercard, PayPal, I presume?
Yes, indeed. I think we want to have or we want to play a critical role, of course. Again, I think we need to balance things out here, and we need to offer consumers what they need. So Matteo mentioned it before, we always need to think about the consumers. And if you look on the trends in payment, I think there are two major trends you discover. One is wallets are on the rise. If you look on different markets globally, you see in Asia there are great solutions, but I also see in India, in Brazil, Pix, UPI, all of those wallet solutions, which should be becoming more the number one payment solution. Why is that? I think because wallets are offering something even more beyond payments. So we all want to pay, but consumers want to have like one wallet where they get also additional services, additional features. Why is Apple Pay great? Why is Google Pay so great? Because they say like, oh, you want to pay? Of course you can pay, but you get also services like you want to go to a different destination. Yes, store your ticket, store your transport ticket here. You want to go to a venue? Yeah, you have a ticket for your venue already there for your next big event. You want to store your ID in the wallet? Of course, you can do that. So, and we think this is necessary to offer such solutions to the consumers. And this is why we say like the solutions you're talking about, especially than PayPal and the cards, they are great. But there is one thing they are lacking. I think they come from the past. They built great solution based on needs from the past. Yeah, say like cards started in the 19th century with an idea. Yeah, paying in store. Are they really good in e-commerce? They are working on it. They built great solutions. They are now introducing click to pay, and I think this is what the market needs, of course, and what the consumer needs. But what's beyond that? I think even there is more we can provide to consumers in that terms. And I think these are the value-added services like putting loyalty programs in combination with payments. Yeah, giving people an opportunity to manage their subscriptions for payments, offering them buy now, pay later solution. But also, why don't store a European identity, or the digital identity, in your wallet? I mean, I'm personally, when I talk with people, they are still bothered that they need to have a physical wallet due to that reason, because we only store wallet payments now in a wallet, but we need to work on that. And I think this is one of our major objectives. Yeah, being beyond a payment solution, being a wallet, and offering everything which is related to payments from one wallet, to one single device. And I think this is also necessary. If you look on the trends, everybody uses his mobile phone today, and nobody uses like physical cards, and but they're still needed, of course.
Yeah, no, that's certainly true. I mean, you go to the younger generation, you walk into any store, and that's certainly the truth that nobody's getting out their wallet with their cards. Absolutely. Sophia, Matteo, keen to get your thoughts on this kind of pan-European initiative that EPI have come up with. I mean, Sophia, is there almost a political necessity for a united European approach when it comes to payments? Obviously, I'm thinking of the recent change in administration in the US. Is that something worth keeping in mind?
Yeah, absolutely. I mean, I think there's kind of more politics in payments than we often realize. I would caveat, I wouldn't link this push for payment sovereignty and a European payment solution to the recent change in administration in the US. I think this is an idea that has been around for a while. I think there's been some anxiety kind of in the European Union and other kind of actors in Europe and in the industry that payments are so dependent on basically two large US card networks. And, maybe we should be thinking about how we can come up with some kind of homegrown mechanism for payments. I mean, that idea has been around for a while. I'd say what I find really interesting is how I feel like I'm definitely hearing the phrase payment sovereignty being used a lot more in the payments industry. And with, colleagues we speak to, people we speak to in kind of fintech and banking and in sort of institutions in Europe, it's definitely coming up a lot more. I remember that the European Payments Initiative that Wero has come out of. I used to actually be a financial journalist before I became a research analyst. I remember writing on EPI several years ago, and I feel, to be honest, I think some people in the fintech and payments industry were a little bit sniffy about the idea, a bit snobby that, you're going to come up with something that will challenge or be an alternative to Visa and Mastercard. But I feel like there's been a sea change, and I feel like what you're doing is being taken a lot more seriously now. And I know there's been a huge amount of interest in the market, in Wero, and what you're doing. And because I think also this is also happening at a time when, I guess, over the past 8 years or so, there's been a lot of talk and I guess a lot of developments around central bank digital currencies all around the world, including in Europe, which are obviously kind of purely digital forms of fiat money, basically. And a lot of the kind of thinking around that is like, okay, do we need some kind of digital payment mechanism, which is, well, I think particularly like not Google, not Amazon, not whatever else there is big tech, something that I guess it's central banks have more control over. So yeah, I think these ideas about kind of sovereignty and control, whether that's to do with kind of operational resilience, like what would we do if either of those two big networks fell over? I think kind of, well, more on the central bank digital currency side, kind of ideas about money supply and sort of monetary policy implications. So I think a lot of these ideas are definitely gaining traction. And I think, Wero is entering the market in a different context to, I suppose, what the EPI was dealing with maybe 8 years ago, say, for example. I may be wrong, Alexandra. I hope I'm not explaining your own business to you. I'm just, seeing what I've said as an analyst. But yeah, I truly, it's very, very cool to be on the podcast with you, because the amount of interest that, we're hearing around in the market, and I think buzz around Wero and curiosity about what you're doing. And I think, some people think this is going to be a huge leap forward for payments in Europe, like, maybe kind of one wallet to rule them all. Other people are a bit more skeptical that it's going to be a unifying payment method in a continent where people have such divergent preferences for how they pay. So I'm going off topic a bit here, but yes, so I'm very excited to to have you on the podcast and have a dialogue, because I think, this is a very interesting time to be talking about some of these questions, in terms of operational resilience, monetary policy, payment sovereignty. Yeah, so I'll stop there.
Yeah, no, thank you. Matthew, what are your thoughts? We'll come to some questions around consumer protection in a minute, but what are your thoughts on this kind of pan-European approach that Wero are introducing?
Yeah, no, I think definitely aligned with what Sophia was talking about, like the political aspect of the initiative. And if you look at, there are precedents. If you look what Russia has been doing with their Mir payment system, they've been developing a network internally that could withstand sanctions. So when Visa and Mastercard decided to cut ties with Russia, at least internally, they've been able to speed up a system that could allow people to transact internally. So I think that is a very similar agenda politically that can and potentially needs to exist in a increasingly more complex political environment where most of the big payment companies are coming out of the US. So I think that's where I associated the main value with an initiative like Wero. From a consumer perspective, I'm not sure I see a ton of value in a pan-European solution, because customers are transacting 99% of the cases within the boundaries of their country. They are sending money 99% of the cases to people within the country. And that's why you see the emergence of local payment methods, because there is a network that is also connected to language, to culture. And you see this evolving country by country. And the other challenge I see that Wero is tackling is to unify the players that are behind, that ultimately are the banks. The banks are the ones that need to collaborate and agree that they want to have a common solution. They want to have a common infrastructure. And you see this has been a challenge over time. Open banking is another good example. It's something that has been taking time to develop, and it's still it's a European-wide scheme, there are local differences. So that is definitely something that it's important to look at when thinking, what do we need to solve for?
Alexander, should we give the floor back to you briefly just to answer some of those points?
Yeah, of course. Well, a lot of thoughts, a lot of discussions here. So I think, yeah, you're right. So people are discussing back and forth. So is the API initiative something good or something bad? But let me tell you this. I really believe that we need to have solutions here for merchants, for consumers that are streamlined, that are up to the latest trends, but also evolving with them. I think this is clearly something we need to look into. Aside from all the political discussions we have, and I'm also a strong believer that in the political sovereignty of Europe, and that we need something here. So this, to be honest, between us, this was also one of the reasons why I joined API. Yeah, I worked for a local scheme for several years, and I discovered there are boundaries, and I discovered talking with merchants all the time. So working with merchants for like more than 12 years on the key account side, that they said like, we need to expand our business. We need to have like a more political footprint in all the markets. The banks need to offer a unified solution to compete against the international schemes to a certain degree. And Matteo, I don't know how you feel about that, but you are representing the merchant in the end here. And this is something I discover in all of my discussions with merchants. They say like, there are less players out there who are really tackling the international schemes here. On a local level, yes, they see the need and good solutions out there, but they're still only on a local level. So, and there is where we step in and say like, of course, banks collaborate. Yeah, they work on also establish the account-to-account solutions in Europe, which is also something which has been built up for the last 5 to 10 years. So we now have the European Payment Council with the SCT Instrus, with SEPA in general, but it hasn't really taken off so far. So we see trends in Germany, in the Dutch market, where they are really using SEPA credit transfer and SEPA direct debit, but we now need to go to the next step. Yeah, I believe that SEPA instant transfer would be a game changer for merchants and also for consumers. Just imagine, as a consumer, you get funds immediately. So this is something huge. Instead of having funds like in 2 or 3 days. Yeah, either if it's like your checks you receive for an employer, or something else, or even money from your friends.
I think like if you actually look at what our payment methods doing, like you're simply building rails that help customers to move money from a bank account to another bank account. And who is building the best features, the best functionality, the best customer protection is ultimately who is winning at this game. Unless we go and we talk about crypto, where there's a different storage of value, money is still being moved from one bank to another. And so that's what we're doing. Like either cards is a set of rails that has features that have been built over time, that can be used online and offline. And PayPal has been doing something similar, and Apple Pay has been doing something similar. Also, when we talk about wallets, very often we forget that they're still going through card rails. You connect your card to a wallet. So it's really about a feature game. Who is offering the best solutions to customers, the best customer protection, and that's ultimately what wins. You can build the best solution for merchants with the lowest possible cost, but if customers don't adopt it, then you don't go anywhere.
Yeah, fully agree. And I think it's not only a feature game. I think it's also a battle of the front end in the end. Who is managing the consumer front end, and who is offering the best user experience and the leanest payment checkouts for these consumers. It must be seamless, because we all know here from a consumer perspective, each click, each step is something which could be a conversion killer. And this is also something we said, like, if you build such an initiative, or a Wero, we need to work on it. So our objective is really say, let's reduce payment to an absolute minimum from a consumer perspective, giving them an option where you say, like, it's almost seamless. That's why we also said, like, we use a wallet device, we use a mobile device and use the wallet on a device, because, like, here, I have my smartphone all the time with me. So if I want to pay, I use that, instead of remembering credentials, clicking on, etc. So, yeah, seamless will be the next thing, and reducing payment steps in the checkout.
Well, let's just keep on that note of consumer protection then, because Matteo, it's a really interesting point you made, because everything is linked to a bank anyway. So if I'm using my digital wallet on my phone, I'm using the card that I've inserted there as well. So there shouldn't be any concern, should there, about consumer protection from APMs as opposed to cards and credit? What would you say?
There are some clear differences, I think. And that's, again, if you go from just moving money from one bank account to another bank account, you don't really have protection. If you send out the money, it's you that is doing that. There is more regulation coming out in that direction, especially in the UK, to prevent fraud and scam. So there are regulatory efforts that are being taken because fraud word has also been involved. Ultimately, like this connection between one bank account to another bank account, there are different solutions. Starting from card networks have been offering customer protection as a functionality. If you have a problem, there is a chargeback. You can dispute and you can have some sort of arbitration. PayPal is doing something similar. Other solutions are not. So it's really how much are you willing to invest in your infrastructure, and there is additional complexity. These are features that, for example, open banking is missing, and to me, that's one of the clear gaps in that type of solution. You might offer something that is leaner and faster, but then if you lack the protection, a customer might not choose you because they are feeling safer. They have that additional value proposition that comes from the traditional card schemes. And so you really need to look at payment method by payment method, scheme by scheme, and understand what is the level of protection that is offered to customers and merchants alike. Because let's not forget, there are also fraudsters that abuse this type of systems, or even good customers that tend to abuse. So the protection needs to exist also from a merchant side.
Yeah, and I guess the follow-up question to that is a question that is posed endlessly. Will we ever see a cashless or a cardless society? I mean, I think we all presumed, I don't know how many years back, 10 years back, that a cashless society was certainly going to happen. And then, Matteo, you mentioned about Germany and how that is, cash is still king there. And I'm starting to doubt that. What are all your thoughts about whether we will see that come to fruition?
I am speaking mainly from a UK perspective, but I don't think we're going to see the end of cash completely. I think a lot of people really do value it as a payment tool. I think getting rid of cash makes a lot of people incredibly nervous. I think in the UK, we've seen actually quite a lot of, surprisingly, in a time where we're living in the digital payments revolution and, the QR code revolution, when I'm out and about in my suburb of London, I definitely see local businesses having signs saying, keep cash, or like, we prefer cash. Or like, don't take cash away. And I think there is a feeling among some segments of the population that there's some kind of slightly sinister push from government or central banks or big business or, big tech to remove cash. And I think cash is very much bound up with ideas of privacy for a lot of people in the UK, rightly or wrongly. And I think cash's use in day-to-day transactions is only going to trend downwards in the UK, and probably in a lot of other countries in Europe, which are more cash intensive, it's 100% is going to trend downwards. But I think I just don't think we're going to get rid of cash completely. I mean, there are exceptions to the rule. I mean, there are obviously countries in the Nordics, which if you look at the data coming out their central banks, there's hardly any cash in circulation. So yeah, not good news for people who are into numismatics and collecting coins. But I think cash is still going to be with us. I think it's going to be a very long time before it becomes a total anomaly and something that we see in a museum, unless you're in Sweden.
Yeah.
For sure, privacy is a feature of cash, but also it's something that enables tax evasion. So that's the other key reason why businesses still and people still use cash. It's not just to not be tracked. They don't want to be tracked for certain reasons. So that's definitely something to keep in mind. So there are two conflicting goals. One is maintaining our ability to not be tracked, to not be controlled. The other one is like we still want to avoid tax evasion and that type of problem. So that's definitely to consider. The other thing to consider about cash is that businesses very often forget about the hidden cost of cash. Like you need to manage cash. You need to move banknotes left and right. You might have your employees that are stealing money from your cash register. Those are hidden costs. And when you go and you compare the actual cost of managing cash is very often higher than what you pay in the transaction fees to your card networks or some other local scheme. But it's harder to measure. And so there is always this backlash against the payments company that take money from you. They're offering a service and you're paying for that service. Then that cost might be regulated, could be brought down. And that's what the European Union has been doing. Obviously, when you bring those costs, you also reduce the ability to offer rewards and loyalty points. So there is a connected ecosystem that can develop if you are allowing businesses to collect more fees. And ultimately, thinking about also a cardless society. When you think about cards as the plastic that you hold in your hands, that's definitely the direction. You're getting more and more cards stored into wallets. As Alexander was saying, like people don't pay anymore with their card. They don't take it out. You use your phone, you use a watch. And that's also the direction that the card networks are taking. Visa and Mastercard announced the plans to basically kill the 16-digit span, also for security reasons. So we are going into that world where Visa and Mastercard, the card networks, are gonna be more building the concept of accounts, and that's also the launch and evolution of solutions like Click to Pay. You don't even need a card anymore. You just need to use your account, and then you're able to connect one bank to another. So that's definitely the evolution that is gonna be happening in the upcoming years, and it's already starting today.
Alexander, I'll take your thoughts on that. Does EPI want a cashless and cardless society?
If you want it, and well, I think it's a different question. I think we need to look on the society and how society and their behavior changes. And of course, when we started thinking about offering a digital wallet solution, we also looked into the numbers and analysis. And we see a clear trend also in Europe that we're getting more and more a digital society. Yeah, we are focusing on digital payments, and I think I fully agree with all Matteo and Sophia already said. I believe people will change. It's a question of how fast will they change. If I look in the UK, they are already cashless. I've been in London this week, and it's awesome. Yeah, paying without cash. So I'm all in on that. But looking on where I'm living in Germany, I think it's a totally different behavior, and I think we need to look into each country and giving the citizen of each country chance to adopt. So yeah, and I think there's one thing I'd like to mention in regards to cash. In the end, my personal belief is I think we need digital payments and we need cash. More of a resilience perspective where we say, like, what happens if all of a sudden, internet isn't available anymore. We can't process any transaction any longer. Yeah, we started with a token, and cash is a token in the end. From my perspective, it's only a value tokenized, yeah, with nice numbers on it. But now we tokenize payments in a lot of different ways. Yeah, we tokenize the payments, but let's keep in mind we're getting more and more digital. But we see each year downtimes of providers, incidents. Even if we work hard on it, we will never come close to the 100% availability of digital payments and everything. So I believe, yes, we will have digital payments. It's a matter of time. Maybe it takes us longer in Germany to adapt to digital payments, like we saw it in Sweden or Denmark, for example, or the UK. But we are heading into the right direction because digital payments offer convenience. Yeah? And it makes you secure. Just imagine you forget your wallet. Again, you take out your watch, you pay. So you go for a run, you're thirsty, you pay. So there is too much convenience around that. But on the other side, I think, yeah, we need to build resilience, and we still need to have like cash as a backup plan. And you see there's also the central banks are working on a lot of projects. Yeah. Even the European Central Bank is working on that. Yeah, try to figure out what could this be, what could be a good solution for the European market, because this is now needed.
Okay, thank you. Well, let's just bring this conversation full circle and round up today's conversation. We've done a bit of future gazing already, but maybe Matteo and Sophia, you can just wrap up with your thoughts about where this space might go, anything that we haven't covered that you think might be on the horizon. We haven't mentioned the role AI might play. Anything on those topics that you'd like to add?
Yeah, sure. I mean, I think the big question for me is the extent to which open banking is going to take off as a payment method for daily life. I think a lot is going to hinge, actually, as kind of Matteo highlighted, on the consumer protection angle. Because I paid for some things using open banking. I've seen quite a few big retailers, actually sort of travel booking platforms. And there's one airline recently, Ryanair, has, I think, implemented open banking payments. And I thought the experience was actually, well, I used it on booking.com. I thought it was quite good. So I'm like, this is interesting. Let's see how this goes. I just feel like open banking is a really big question. And I think we're going to see local payment methods really punching above their weight in future, because you can do, as I mentioned earlier, you can do so much more in certain countries with your local payment method than just pay your mates. And I think a lot of them, I see them almost functioning like kind of mini super apps. The big question is the extent to which Wero is going to make a land grab on some of these local payment methods in other European countries. I'm going to be very, very interested to see how that all plays out. If we see Wero becoming truly pan-European, or we see you more as like a kind of a regional champion, building on the massive success of Ideal, which you've integrated. And having integrations of other payment methods. So I'm so curious to see how that all plays out. I'm going to put my hands up and say I don't know, because I don't know. But yeah, please keep in touch with us.
Great. And Matteo, I'll give the final thoughts to you. Anything else that you see on the horizon here?
I think when we talk about APMs, we also should not forget that the card networks are still going to be there, even if cards as a payment method are going to be going away or evolve. That's definitely what you see. Like Visa and Mastercard have been doing acquisitions as well of companies doing open banking, account to account. So they see the evolution. They might not be the fastest moving companies out there, but the whole industry is also not moving at lightning speed. There are developments that are very fast, but consumer preferences are taking some time to change, unless there is a clear net new value proposition that is really disrupting the customer experience. So really what I would look at is also how are the card products going to be evolving in response to the rest of the evolution of the market, in response to customer preferences, also to drive efficiency in cost and in customer preferences.
Excellent. Well, that is a wrap on today's conversation. A big thank you to all my guests, to Alexander, to Matteo, and to Sophia. Please do follow this Pay It Forward series wherever you get your podcasts. You can catch up with all the previous episodes of the podcast at payable.com/podcast and also on our C-Suite podcast website. And if you want to contribute to the discussion, you can find the C-Suite podcast on LinkedIn and all the usual social channels. Finally, if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com. But for now, from me, Graham Barrett, thanks for listening and goodbye.